Gold has been unstoppable. In last 5 years, prices have almost doubled, crossing 1 lakh per 10 grams. And if you had invested through mutual funds instead of physical gold, your wealth would have grown steadily without worrying about lockers, making charges or liquidity. But here is the real question, which is the best gold mutual fund in India today? And more importantly, how much gold should you actually hold in your portfolio to protect and grow your wealth? Hello everyone, my name is Latish. I help in creating strategies that balance equity, debt and gold for long-term goals. You can reach out to me at the number which you see on the screen. Also, you'll find the WhatsApp link in the description. Gold isn't just tradition, it's a financial shield. In the last 5 years, gold has delivered almost 18 to 20% CAGR and also doubling in value. Compare that with FD's 6 to 7%, PPF of 7.5%, you see where gold stands out. But its real strength isn't just raw returns, it is in how you balance your portfolio. Let's look at the history. From 2015 to 2025, the Nifty 50 TRI delivered about 13.6% CAGR. Gold in the same period returned 14.8% CAGR. Both did well, but here's the difference. When equities fell sharply, gold often rose and held firm. The best example is the COVID crash of 2020. Equities fell nearly 40%, but gold surged. Now imagine if your portfolio was 80% equity and 20% gold, your long-term returns would have been almost as strong as pure equity. But your downside risk would be 30 to 40% lower in corrections. That means smoother compounding, faster recovery and more confidence in staying invested. And here's where my role as your advisor comes in. Adding gold makes sense, but the right mix isn't the same for everyone. A young investor saving for retirement may just need 5 to 10% in gold. But someone who is nearing retirement may need a larger hedge. And that's exactly where I help through Rupeezy. The right choice depends on your goals, your time horizon and your risk appetite. A young investor saving for retirement will need a different allocation compared to a retiree looking for stability. By opening your account with the link in the description, you get direct access to me. I will help you decide the right mix of equity, debt and gold that fits your journey, not just generic advice. I'll personally guide you on how much gold to hold, which funds suits your goals and how to balance gold with equity and debt. That's where I step in as an advisor through Rupeezy. A balanced portfolio is the real secret to wealth creation and Rupeezy makes it easy to get started. Because the truth is, there is no one best fund for everyone. The best plan is one that's built for you. Now that you understand why gold matters, let's compare the top 5 gold mutual funds by AUM. HDFC Gold ETF, SBI Gold Fund, Kotak, Nippon India and ICICI Prudential Gold Savings Fund. Before looking at returns, let's quickly understand the basics of each of these funds. HDFC Gold ETF, which is a fund of fund, launched in November 2011. AUM is 10,691. Fund managers are Ms. Nandita and Arun Agarwal. It's the largest in the category, offering liquidity and stability. SBI Gold Fund, launched in September 2011, has an AUM of 4,739. Fund manager is Mr. Raj Gandhi. This is popular among retail investors thanks to its lower expense ratio. Kotak Gold Fund, launched in March 2011 with an AUM of 3,301. The fund managers are Mr. Abhishek and Mr. Jeetu. This has given consistent performance, though slightly higher cost. Nippon India Gold Savings, launched again in March 2011, has an AUM of 3,248. This is one of the oldest and widely adopted funds. And the last one is ICICI Prudential Gold Savings, which launched in October 2011. Fund manager is Mr. Manish and efficient tracking with ICICI's research strength. Let's look at the returns. Rolling returns tells us how consistent a fund is across all market conditions. Average 3-year rolling return is 11%. Average 5-year rolling return is 11.5%. Best 1-year return as high as 65% during sharp rallies. And the worst 1 year has been 17% during corrections. Over 90% of 3-year periods were positive across all these 5 funds. This consistency shows why gold is not just for short bursts but also reliable for long run. Let's look at SIP performance, the way most Indian investors prefer to invest. A 10,000 SIP from October 2015 to September 2025, which is a total investment of 12 lakhs, the current value in SBI Gold is 28.9 lakhs, HDFC is 28.6. Similarly for ICICI and Kotak, it is 28.6 and Nippon India is 28.5 lakhs. You can also see the XIRR returns of each of these funds. The gap isn't huge, but SBI adjusts slightly, higher in SIP efficiency. For lump sum investors, a 10 lakh invested in September 2015 grew in ICICI to 35.6 lakh, SBI is 35.5 lakh, in Kotak and HDFC 35.2 lakhs, and in Nippon Gold it was 34.6 lakhs. Once again, ICICI and SBI are marginally ahead, while Nippon trails slightly. Since all funds track domestic gold, portfolios are almost identical. The main differentiators are expense ratio. SBI and Nippon has the lowest and Kotak has the highest. Tracking error: how closely they mirror gold prices. AMC strength and liquidity. HDFC's size is unmatched, ICICI is efficient, and SBI is trusted. So who should consider gold mutual funds? Anyone who wants diversification and stability. Allocation of 5 to 15% of portfolio is ideal. Works best as a hedge against equity volatility and for long-term wealth protection. To wrap up, SBI and ICICI slightly lead the pack. HDFC brings size and trust. Kotak and Nippon remain solid, consistent performers. But remember, the bigger question isn't which fund to choose. It is how much gold to hold in your portfolio. If you are looking for help in terms of having a personalized investment plan across gold, equity, and debt, you can always reach out to me at the number which you see on the screen. As mentioned earlier, you will also find the WhatsApp link in the description. If you did like this video, share it with your friends and do subscribe to our channel if you have not yet done so. Thank you for watching and have a good day.